Hi guys, this is CA Balakrishna. In the previous video, we have completed revision of appointment and qualification of directors. Now we will be starting with revision of appointment and remuneration of managerial personnel. That is second chapter relating to directors. If you see, in this chapter we will be having section number 196 to section number 205. First of all, we will be starting with section number 196, which deals with appointment of managing director, whole-time director and manager. Before reading this section, first of all, let us understand the difference between executive director and non-executive director. Okay, after understanding the difference between executive director and non-executive director, we will start with section number 196. First of all, executive director means managing director and whole-time director will be known as executive director, and remaining all other directors will be known as non-executive directors. Now, what is the difference? If you see, non-executive director is appointed in the company only for the purpose of decision making. Okay, the objective of non-executive director is decision making, whereas the objective of executive director is decision making. Along with decision making, the executive director will also be appointed as employee of the company. Okay, the main difference between non-executive director and executive director is only the employment. Non-executive director is not employee of the company, whereas executive director will be employee of the company as well. So you can conclude that executive director means non-executive director plus employment. That means for a director to be appointed as executive director, first of all he should be appointed as a non-executive director. See, let me tell you how it happens in the real life. First of all, the company will appoint any person as a non-executive director. For appointing non-executive director, basically section number 160 is followed, wherein general meeting ordinary resolution would be sufficient. Under section 160, general meeting ordinary resolution. After appointing a person as a non-executive director, if the company is satisfied with the work performed by such non-executive director, the company can promote such non-executive director as a executive director. Okay, this is what happens in the normal scenarios. Now, for giving employment to this non-executive director, see, to convert an executive director into a non-executive director into executive director, you have to give employment to the non-executive director. Now, this employment, for giving the employment, you can divide it into two parts. Let's say the age of the person is 21 to 70 years. In that case, board meeting ordinary resolution is required. Okay, first of all, there is a non-executive director in the company. Now, board of director feels that this non-executive director should be appointed as executive director. Thereby, they will recommend the appointment of this non-executive director as executive director by passing board meeting ordinary resolution. Once they recommend, in the general meeting also, ordinary resolution of shareholders is required for approving the appointment of non-executive director as executive director. Where this is said? This is said in section number 196. Hope that is clear. This is the case if the age of the person is above 21 years and up to 70 years. What if the age of the person is 70 and above? That means the person whom you want to appoint as an executive director is having age of 70 or more. In that case, board meeting ordinary resolution is required. Okay, first of all, board of directors have to recommend such person as executive director by passing ordinary resolution. After that, in the general meeting, special resolution is required. Normally, if the age is below 70, general meeting ordinary resolution is sufficient. If the age is 70 and above, general meeting special resolution is required. Where it is said? It is said in section number 196. Now, let's say in the general meeting, special resolution was not passed. Okay, but ordinary resolution was passed. In that case, see, general meeting special resolution not received, but general meeting ordinary resolution received. In that case, by this ordinary resolution, you can approach the central government and you can take the permission of central government for appointing this person as executive director. One second. Sorry, there was some disturbance. Yeah. Now, if general meeting ordinary resolution is received, you can appoint this person as executive director by taking approval of central government if such person's age is 70 and above. If general meeting ordinary resolution also not received, in that case, even though you have taken the permission of this central government, such person cannot be appointed as executive director. Hope that is clear. These are specified in section number 196 regarding appointment of executive directors. Next, still section 196 is not completed. We have just seen the appointment section. Still there is a lot to be discussed in section 196. First of all, before discussing that, we will see the difference between managing director and manager. See, manager is also appointed as per section 196 only, and managing director, whole time director are also appointed as per section 196 only. If you see, this managing director and whole time director are executive directors, but manager is not an executive director. Okay, manager is not an executive director, but for appointment of manager, section 196 has to be followed. Okay, the process that is required for appointment of executive director has to be followed even for the appointment of this manager also. Hope that is clear. But manager is not an executive director. Now, let us understand the difference between managing director and manager. First of all, managing director must be a director, whereas manager need not be director. However, director can be appointed as a manager. Okay, manager need not be director, but a director can be appointed as a manager. There is no prohibition. Now, here in case of managing director, if director vacates, then the managing director also vacates. That means a person who is a non-executive director in the company has been appointed as a managing director. Now, if such person vacates his office of directorships, then his office of managing director will also be vacated. Whereas, in case a person who is a non-executive director is appointed as a manager, then if the office of this person as a non-executive director is vacated, then the office of manager will not vacate. That is the second difference between managing director and manager. And the third difference is managing director will be having substantial powers of management, whereas manager will be having whole or substantially the whole of the affairs of the company. That means if you see, both these people are almost having same powers. Okay, both manager and managing director are having the same powers for managing the affairs of the company, almost same. Now, that is the reason why what Companies Act says is a company cannot appoint manager and managing director at the same time. Why? Because the powers that are given to both of them are almost same. If you appoint both manager and managing director in the company, there will be overlapping of powers and there will be some type of conflict between these two parties. Thereby, Companies Act doesn't allow a company to appoint both managing director and manager at the same time. Hope that is clear. Now, tenure. What would be the tenure of this executive director? See, for purpose of section 196, even though this manager is not an executive director, for all the provisions prescribed in section number 196 will be applicable even for manager also, even though he is not an executive director. Hope that is clear. That means that tenure that has been prescribed for executive director in 196 will be applicable even for manager also, because the entire section of 196 will be applicable even for manager also. Now the tenure, what is the tenure of this executive director? The tenure of the executive director will be 5 years. Whether after completion of this 5 years, whether he can again be reappointed? Yes, he can be reappointed, but the reappointment should be considered and made only in the last year. Let's say you have appointed managing director for 5 years. Now you can consider his reappointment only after completion of 4 years. That means in the last year of his tenure only you can consider his reappointment. Hope that is clear. That would be the tenure and reappointment of executive director. Now disqualifications of executive director. If any person is possessing these 5 disqualifications, then he cannot be appointed as executive director. See, while discussing chapter 1 section number 164, disqualifications of directors, I have told you that I will be linking those provisions with section number 196. Now the time has come. First of all, I'll explain you these provisions. After that, I will be linking the provisions of section 164 with the provisions of section 196. Okay. First of all, we will see the disqualifications of executive director. The first disqualification is the person whom you are going to appoint as an executive director must not be disqualified under section 164. Okay. Under section 164, there are disqualifications for normal director. If he is not eligible to be appointed as normal director itself, how can he be eligible to be appointed as executive director? Thereby, if a person possesses disqualifications under section 164, then he cannot be appointed as executive director. Next, the age of the person whom you are going to appoint as executive director must not be below 21 years or attained 70 years. If at all he attained 70 years, then you will be requiring to pass general meeting special resolution or general meeting ordinary resolution and central government approval. Hope that is clear. Next, third point is undischarged insolvent or at any time. See, underline that any time. I'll tell you the relevance of it. At any time adjudged as insolvent. See, under section 164, if the disqualification is attached, such disqualification is not for the lifetime. But here in section 196, if the disqualification is attached, he cannot be appointed as executive director for the lifetime. The disqualification will be for the lifetime. Okay, that means if any person is adjudged as insolvent, in that case he cannot be appointed as executive director for the lifetime. I will be explaining this point clearly while discussing the linking provision. Okay, now I am just reading it. Next, fourth point, at any time not paid dues to his personal creditors or made composition with them. If at all he has not paid the dues that are payable by him to the creditors at any time, or he has made composition, that means let's say he has to pay 100 crores. He entered into a composition with the creditors saying that I am not in a position to pay 100 crores, I will pay the 50 crores, you please waive of the 50 crores. That will be composition. If he has entered into any composition with the creditors, in that case he cannot be appointed as executive director for the lifetime. Next, fifth point, at any time convicted by court and sentenced for imprisonment of more than 6 months. If he has been punished with an imprisonment of more than 6 months, then he cannot be appointed as executive director for the lifetime. These are the 5 points of disqualification. Apart from these points, there are additional 3 disqualifications that we will discuss. First of all, we will understand these points. Age factor. See, if the age of the person is less than 18 years, then he cannot be appointed as either executive director nor non-executive director. Okay, for a person to be appointed as a director, first of all he should be having age of more than 18 years. That is okay. Next, if the age of the person is more than or equal to 18 but less than 21, in that case he can be appointed as non-executive director but cannot be appointed as executive director, because for appointing a person as executive director his age should be more than 21. Next, if the age of the person is more than or equal to 21 but less than 70, in that case such person can be appointed as both executive director and a non-executive director. Next, if the age of the person is above 70 years, he can be appointed as non-executive director, but for appointing him as an executive director you have to take general meeting special resolution. If general meeting special resolution is not passed, at least take general meeting ordinary resolution and central government approval. That is subject to the conditions executive director can be appointed if his age is more than 70 years. Next, that is the age factor. Moving to insolvency factor. C, disqualification of director based on the insolvency. First of all, application for insolvency can be made either by himself or by the creditors. See, under IBC, Insolvency and Bankruptcy Code, you will be reading that the application for initiating insolvency can be made either by himself or by the creditors, the financial creditors, operational creditors. Now, the first point, application for insolvency is made by self. Okay, once the application for insolvency is made by that person, he cannot be appointed as either executive director nor non-executive director. For how much time? See, for during this time, till once the application is made, court ordered that you are not insolvent, you are solvent, your assets are more than liabilities. Okay, you are solvent only, you are not insolvent. Like this the court has ordered. Once court has ordered that you are solvent, in that case he can be appointed as executive director or non-executive director. But till the time court has not passed the order, he cannot be appointed as either executive nor non-executive. Hope that is clear. This is a one type of order that court can pass. If court passes that you are solvent, after passing the order he can be appointed as executive or non-executive. Next, if court passes the order that yes, you are insolvent only, but I am still not discharging your insolvency, like this the court has passed the order. That means court declared that such person is insolvent, but court has still not released such a person. Releasing such person means, see, this person will be having some assets, this person will be having some liabilities. Now the assets are less than liabilities, thereby the court has to pass an order that the assets will be distributed among the liabilities in some proportion as calculated, and after distributing, such a person will be discharged. Till the time the assets are not distributed, he is not discharged, he is still undischarged insolvent. Okay, once the assets are distributed, court will pass an order of discharging him from insolvency. Now still such order of discharge is not passed by the court. In that case he cannot be appointed as either executive nor non-executive. Once the court has discharged him from insolvency, he can be appointed as non-executive director, but he cannot be appointed as executive director for lifetime, because we have discussed that if at all a person is attached with any of the disqualifications prescribed in section number 196, he cannot be appointed as executive director for the lifetime. Hope that is clear. Now, this is the situation if the insolvency application is made by himself. Now, the insolvency application is made by creditor. If the insolvency application is made by creditor, till the time court passes order, he can be appointed as non-executive director but cannot be appointed as executive director, because if the creditor has given or initiated a insolvency application, means the person has not paid dues to the creditor. This is one of the disqualifications for executive director. If you see here, the fourth point, at any time not paid dues to his personal creditors or made composition with them. If he has not paid the dues, then he cannot be appointed as executive director. Till what time? Till the court has passed the order. Now, court has passed the order that such person is not insolvent, such person is solvent only. Once the court has passed such order, from that date he can be appointed as both executive and non-executive. But court has passed the order that yes, such person is insolvent, but still I am not discharging him from the insolvency. In that case, after such order is passed, he cannot be appointed as both non-executive director and executive director. Now, court has discharged him from insolvency. Once court discharged him from insolvency, he can be appointed as non-executive director, but cannot be appointed as executive director for lifetime. This is the entire chart relating to insolvency factor. If you want, you can take a screenshot of it. You can take this age factor, and you can also take this. Okay, this is reading together of insolvency points that are prescribed in section number 164 and insolvency disqualifications prescribed in section number 196 for executive director and for all the directors. Hope you are done. Now, imprisonment factor. Now, the person has been convicted by court and imprisoned for less than 6 months. If he is imprisoned for less than 6 months, then he can be appointed both as executive as well as non-executive. Whereas if he is imprisoned for equal to 6 months, in that case he cannot be appointed as executive nor non-executive for a period of 5 years. Whereas he has been imprisoned for more than 6 months but less than 7 years, then he cannot be appointed as non-executive director for 5 years, executive director for lifetime, and imprisoned for 7 years or more. In that case, he cannot be appointed as both non-executive and executive for lifetime. This is reading together of section number 164 and section number 196. You can also take a screenshot of this. Oh, this is clear. Next, we are left with this additional disqualifications or additional qualifications prescribed in schedule 5. What are these? First of all, additionally, the person whom you are going to appoint as executive director must also possess these qualifications. What are they? Not been sentenced to imprisonment for any period or fine exceeding 1000 under 19 specified acts. You can find those 19 specified acts in the book. All those Income Tax Act, GST Act and FEM Act, all those 19 acts are specified. He should not have been imprisoned under those 19 acts for any period, and he should not be imposed any penalty of more than 1000 rupees under those 19 acts. Next, not being detained for any period under Coffee Posa Act. See, Coffee Posa Act means Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. You should not be detained under this Coffee Posa Act. Next, and such person must be present in India during last 12 months. These are the additional 3 qualifications that person must possess under schedule 5. These qualifications are prescribed under schedule 5. While discussing schedule 5, I will refer to these points. Next, by this we have completed section number 196, appointment of managing director, full-time director and manager. Next, section number 203, which deals with appointment of key managerial personnel. First of all, we will see who are the people covered under this key managerial personnel. There are 6 people that are covered under key managerial personnel: managing director, manager, whole-time director, CS, CEO, CFO. These 5 people, these 6 people are key managerial personnel. If you observe, this managing director, whole-time director and manager, the appointment of these three people is already discussed under section 196 and it is also being discussed in section 203. Now which section you have to follow? You have to follow section 196 only for appointing managing director, whole time director and manager, because that section specifically dedicated for these three people. Now under section 196 what we have learned? Board meeting ordinary resolution is required, general meeting ordinary resolution is required, or special resolution if age is 70 or above. Now for that those three people. Now for CS, CEO, CFO under section 203 board meeting ordinary resolution is required for appointing the CEO, CFO and CS. Now applicability of whole time key managerial personnel, that means for which type of companies the provisions relating to this whole time key managerial personnel will be applicable. Let us see. One second, let me see whether the video is recording or not. Yeah, fine. Yeah, applicability of whole time key managerial personnel. This provision of section 203 will be applicable for all listed companies or unlisted public companies having paid up share capital of 10 crores. These types of companies must appoint following people. In the first place, it should appoint either managing director or CEO or manager. If these three people are not there, you appoint whole time director. Okay, of these four people you should appoint at least one. Okay, these people who listed company and unlisted public company having paid up share capital of more than 10 crores. And apart from first point, you should also appoint a CS and CFO. Okay, these should be whole time employment of the company. That is the reason why we are calling them as whole time key managerial personnel. Now, and this is regarding listed companies and unlisted public companies. For private company having paid up share capital of more than or equal to 10 crores, it must appoint one CS. Okay, whole time CS must be appointed by a private company whose paid up share capital is more than or equal to 10 crores. This is the applicability of section number 203. Now there are some additional points in section number 203 we will discuss. The additional point number 1, which says that chairperson of company cannot be appointed as CEO or managing director of the company unless, that means for the company there will be chairperson. Such chairperson cannot be appointed as managing director or CEO of the same company unless, that means in the following two situations he can be appointed. What are those two situations? AOA provides for the same. AOA says that company you can appoint our chairperson as either CEO or managing director. If AOA permits, you can appoint. Or it is a public company with paid up share capital of more than or equal to 100 crores and turnover of more than or equal to 1000 crores and engaged in multiple businesses. If all these conditions together are satisfied, even in that case also you can appoint chairperson of the company as a CEO or MD of the company. If you see the Reliance company, in the Reliance company, Mukesh Ambani is both chairperson as well as managing director of the company. Why it has appointed? Because it is falling under this second criteria, therefore it is free to appoint the chairperson of the company as managing director or CEO. Next, another additional point. One person cannot act as whole time key managerial personnel only in, one person can act as whole time key managerial personnel only in one company at a time. That means a person can be appointed as whole time key managerial personnel only in one company, not more than one company. But in the exceptions, he can be appointed in more than one company. What are the exceptions? Let us see. Exception number 1. Exception number 1. Can act as a whole time key managerial personnel of subsidiary at the same time. See, the person is whole time key managerial personnel of A Limited. Now, to the A Limited, the subsidiary is B Limited. In this B Limited, the person can act as whole time key managerial personnel because the B Limited is a subsidiary of A Limited. Okay, the general rule is that a person can act as whole-time key managerial personnel only in the one company, but in the exceptions he can act as whole-time key managerial personnel in more than one companies. Of that, first exception is a person can act as whole-time key managerial personnel of subsidiary company, and the second exception is the person is managing director or manager of one company and he can be appointed as managing director of other company, subject to that in that such other company board of directors in the board meeting unanimous resolution has been passed. Hope that is clear. See, in the A Limited, Mr. A is either managing director or manager. Now there is B Limited. In the B Limited also they want to appoint this Mr. A as managing director. For appointing so, in the B Limited's board meeting unanimous resolution is required. Hope that is clear. This is the second exception. Now, casual vacancy of whole-time key managerial personnel. If there is any casual vacancy in the office of whole-time key managerial personnel, that vacancy must be filled by whom? Board of directors. Within which time it has to be filled? It has to be filled within a period of 6 months, and the resolution is required is ordinary resolution. Now you can get a doubt that in whole-time key managerial personnel we are also having whole-time director and managing director. These are directors. If the casual vacancy of director arises, then such casual vacancy must be filled as per section 161 subsection 4, not as per section number 203. Section number 203 will be applicable only for those types of whole-time key managerial personnel who are manager, CS, CEO, CFO. Okay, for these 4 people the casual vacancy will be filled up as per section number 203. But for managing director and whole-time director who are also key managerial personnel, but since they are directors in the first place, their casual vacancy will be filled as per section number 161 subsection 4. In section number 161 subsection 4 also board meeting ordinary resolution is only required, but the time limit of 6 months is not required. Okay, at their wish they can appoint at whatever time they want, but for section number 203 to fill the vacancy of whole-time key managerial personnel, it has to be filled within 6 months. Whereas in section number 161 subsection 4 there is no such urgency. By this we have completed section number 203. Next, section number 197. We have completed section number 196, section number 203. Moving to section number 197, which deals with the overall maximum managerial remuneration that can be payable to the directors. First of all, I will be dividing this remuneration payable to the directors into 2 parts. First one is remuneration payable to executive directors and remuneration payable to non-executive directors. Okay, this is the 2 parts. First of all, we will see executive directors part, remuneration payable to executive directors. Now, this can be again further divided into 2. In case company is having profits, if company is having profits and such company is having only one executive director, in such case maximum managerial remuneration that can be paid to such one executive director is 5% of total net profits of such company, and this net profit has to be calculated as per section number 198. There are various points of additions and deletions that has to be made for calculating net profit under section 198. That points you please refer. I'm not going to discuss those points because they are just additions and deletions. That is, if the company is having only one executive director, the maximum managerial remuneration that can be paid to him is 5% of net profit of such company. Next, if company is having more than one executive director, in that case maximum managerial remuneration that can be paid to all such executive directors will be 10% of the net profit of company, calculated as per section number 198. Net profit has to be calculated as per section number 198. Next, in case company is having losses, if the company is having losses, then the remuneration has to be paid as per schedule 5 limits. I will be discussing the schedule 5 limits after completing this. this is the remuneration that is payable to executive directors. Now remuneration payable to non-executive directors. Here also we will be dividing it into two parts. One is company is having profits, company is having losses or inadequate profits. If company is having profits, here also the amount of remuneration that is payable to non-executive director will be dependent based on the number of executive directors. See, if the company is having executive directors, then the maximum managerial remuneration that can be paid to all the non-executive directors will be 1% of the net profit of the company. Hope that is clear. If the company is not having executive director, in such case maximum managerial remuneration that can be paid to all the non-executive directors would be 3% of net profit of the company. If company is having losses, then as per schedule 5, I will be discussing the schedule 5. Now apart from this remuneration, there is also sitting fee concept. Sitting fee means the fee that is paid to the directors for attending the board meetings. Now as per ICAI, this sitting fee can be paid both to executive directors and non-executive directors, but in reality the sitting fee can be paid only to the non-executive directors. But as per ICAI, the syllabus, sitting fee can be paid both to executive directors and non-executive directors, and the maximum amount of sitting fee that can be paid is 1 lakh per director. And there is another point that sitting fee that is paid to the independent directors and to the women director should not be less than the sitting fee that is paid to the normal directors. Okay, the sitting fee that you pay to executive director or to women director should not be less than the sitting fee that you are paying to other directors. Hope that is clear. These are the concepts relating to sitting fee, and these are relating to remuneration. If you want, you can take a screenshot. Okay, now these are the limits of 1%, 3%, 5% and 10%, and overall limit of 11%. See, overall remuneration to all the executive directors and non-executive directors cannot be more than 11%. This is the overall limit of remuneration that is paid both to executive and non-executive together. And also the amount of sitting fee that you are paying should not be included for calculating this percentages. Okay, the amount of sitting fee is in addition to the remuneration that you have calculated here. Hope that is clear. Next, let's say you want to give more remuneration than the limits prescribed here. In that case, you have to pass a general meeting ordinary resolution. By passing general meeting ordinary resolution, you can give the remuneration more than the limits that we have discussed here. Next, moving to schedule 5 limits, that is the remuneration that is payable to the directors in case company is having losses or inadequate profits. In the schedule 5 limits, the remuneration will be paid based on the effective capital. Okay, now how the effective capital is calculated? See, for calculating the effective capital, first of all you have to add paid up share capital, free reserves, securities premium, long-term borrowings, long-term debentures and long-term deposits. You have to add these 6 items. From these 6 items, you have to reduce these 3 items. What are they? Investments, accumulated losses and preliminary expenses. These 3 items has to be reduced. Now the amount that you have received by calculating these items would be the effective capital. Now based on this effective capital, the limits of remuneration is prescribed in schedule 5. Let us see. Item A. Basically these limits are covered under item A. Now if the effective capital of the company is negative or less than 5 crores, in that case the remuneration that can be paid per executive director per year would be 60 lakhs. That means for each executive director you can pay up to maximum of 60 lakhs of remuneration per year. Okay, per year, if the effective capital is negative or less than 5 crore. And for per non-executive director per year would be 12 lakhs. If the effective capital is 5 crore to 100 crores, here 5 crore means inclusive of this 5 crore. If the effective capital is equal to 5 crores, even in that case also you will be falling in this second row. In that case, the remuneration that can be paid to executive director would be 84 lakhs and non-executive director would be 17 lakhs. Now, if the effective capital is 100 crores to 250 crores, then remuneration is 120 lakhs per executive director, 24 lakhs per non-executive director. If it is 250 crore and above, then remuneration per executive director is 120 lakhs plus 0.01% of effective capital in excess of 250 crores, and for non-executive director 24 lakh plus 0.01% of effective capital in excess of 250 crore. These are the limits that are prescribed under Schedule 5 for remuneration in case company is not having adequate profits or company is having losses. Next, that is item A. Now there is also item B. Now see, basically this item B is applicable if you want to pay the remuneration as per limits specified in item A to a person, that is to a director who is also acting in his professional capacity. See, for a director who is also working in professional capacity, remuneration as per item A can be paid if following three conditions are satisfied. In professional capacity means, let's say he is a doctor. Now he is appointed as director of the hospital and he is also working in the hospital in the capacity of his profession, that is as a doctor. In that case, for paying remuneration to this type of person, you have to comply with these three conditions also. What are those three conditions as per item B? These three conditions are prescribed in item B. First one, such person is not having interest in capital of company, holding company, subsidiary company. However, having interest up to 0.5% of such paid up share capital of the company is permitted. Okay, that is the first condition. Second condition, such person is not related to director or promoter of company, holding company, subsidiary company in how many years? In preceding 2 financial years. Next, in not financial years, in preceding 2 years before his appointment. Next, the third qualification is he must possess graduate level qualification with expertise in field in which he operates. Okay, if he is a doctor, he must have the relevant degree for practicing such profession. Now, apart these these conditions, there are some additional conditions that have to be satisfied. What are they? First of all, for paying the remuneration, board meeting ordinary resolution is however required. Therefore, board meeting ordinary resolution is must be passed, and approval of nomination and remuneration committee. See, if the company is required to appoint a nomination and remuneration committee, in such case, even the approval of nomination and remuneration committee is also required for paying the remuneration. That is the second condition. And the third condition is, company must not have defaulted in repayment of its debts to the financial institutions and public financial institutions and all other creditors and deposits, and also the company should not have defaulted in repayment of the interest that has been accrued. If at all company has defaulted in payment of any of these debts, for paying the remuneration it has to take approval of such a financial institution to whom it has defaulted. Hope that is clear. Next, general meeting ordinary resolution or general meeting special resolution for item A. That means, see, for paying remuneration as per these limits, you have to take general meeting ordinary resolution. If you want to pay remuneration in excess of these limits, then you have to take general meeting special resolution. Hope that is clear. And general meeting special resolution for item B, which would be valid for 3 years. See, if you want to pay remuneration to a person who is acting in his professional capacity, then then you should also take general meeting special resolution, and such special resolution will be valid for a period of 3 years. Hope that is clear. For paying remuneration as per item B, general meeting special resolution is mandatory. That is regarding remuneration that will be paid in case of companies having losses as per schedule 5. Now we will see the structure of schedule 5. Schedule 5 of Companies Act. Basically you can divide this schedule into 4 parts. Part 1, part 2, part 3, part 4. Part 1 deals with additional eligibility conditions for executive director, which we have already discussed under section 196. That 3 conditions, that is Coffee Posa Act and 19 specified acts. Okay, all those additional conditions are prescribed in part 1 of schedule 5. Okay, moving to part 2. This part 2 can further be divided into 5 sections. Section 1, section 2, section 3, section 4, section 5. Now section 1 of part 2 of schedule 5 deals with remuneration that is payable to the directors in case company is having profits. In case company is having profits, the remuneration will be paid as per section number 197. The same will be said by section number 1 of schedule 5 part 2. What it says is you refer to section number 197. Okay. Section 2 deals with remuneration that is payable to the directors in case company is having losses. The limits that we have discussed 5 minutes back, that is item A, item B. The same would be dealt here in the section 2 of part 2 of schedule 5. Next, section 3. Section 3 deals with remuneration that can be paid by certain 5 special types of companies even though they are incurring in losses, but subject to some additional conditions. That means, see, section 3 prescribes 5 types of companies. Now if these 5 types of companies wants to pay remuneration as per item A while they are incurring into losses, then apart from the conditions that are prescribed there, it should also comply with this following 3 conditions. Okay, first of all we will see what are those 5 companies under section 3. Okay, director remuneration in case of losses, special cases, can pay remuneration in excess of section 2 limits in case of losses and has to comply with these conditions. Let us see the types of 5 companies that are prescribed. First one, remuneration is paid by some other company which is foreign company or company which has got special resolution from shareholders, provided that such remuneration is within the limits of section number 197 for such company. I understood that you haven't understood anything. See this diagram. See, there is a company A Limited. Now in this A Limited there are 3 directors, director X, director Y, director Z. Now the remuneration of these 3 directors are being paid by some other company, that is B Limited. It can pay the remuneration of these 3 directors. Subject to that, the B Limited must comply with these 4 conditions. What are they? The B Limited must be either a foreign company. Okay, if it is a foreign company, it can pay the remuneration of directors of A Limited, or B Limited got approval from their shareholders to pay remuneration of other company. Ordinary resolution is required. Okay, B Limited in its general meeting should get the approval of its shareholders through ordinary resolution permitting the company to pay the remuneration of some other company's directors, that is A Limited's directors. Or the third condition, overall overall remuneration, that is remuneration that is being paid to the directors of B Limited and to the directors of A Limited should be within the limits specified under section 197. Okay, the 3%, 1%, 5%, all those limits. Next, fourth point, B Limited should be a profit making company. That means if B Limited itself is a loss making company, it cannot give the remuneration to the directors of A Limited. Hope that is clear. This is said in this first point. Where is that? Yeah, okay. Such type of companies covered here. Now, the second type of special condition, special case, that is sick company as declared by BIFR, that means Board for Industrial Financial Reconstruction. Yeah, Board for Industrial Financial Reconstruction. Now, if any company has been prescribed by such BIFR as sick company, then such sick company can pay remuneration to the directors as per item A for a period of 5 years, provided that it comply with these additional 3 conditions. We will see what those additional 3 conditions are. Next, third case. Company to him resolution plan under IBC is approved. Okay, under Insolvency Bankruptcy Code, resolution plan has been approved against the corporate debtor. Then such corporate debtor can pay remuneration as per item A for a period of 5 years, subject to the conditions that we will be discussing. Next, a newly incorporated company can pay the remuneration even though it is incurring losses for a period of 7 years. And if remuneration is fixed by BIFR or NCLT, that is National Company Law Tribunal, then also the remuneration can be paid subject to the 3 conditions. What are the 3 conditions? Apart from the conditions specified in section 2, following conditions should also be satisfied. What are they? First condition, managerial personnel should not receive remuneration from any other company. Okay, the managerial personnel who are receiving remuneration from any of these 5 types of companies should not receive remuneration from any other company. That is the first condition. Next, auditor or company secretary should give a certificate that creditors and term lenders agreed for appointment and remuneration for the managerial personnel of these 5 companies. Such a certificate has to be obtained from the company secretary or the auditor, stating that the lenders and creditors of these 5 people, okay, these 5 people have agreed for appointment and remuneration of managerial personnel of these 5 special cases. That is the second condition. Moving to the third condition, auditor or company secretary certificate that no default in payment to creditors and deposit holders. Okay, these 5 types of companies have not defaulted in payment to lenders and creditors, that deposit holders and creditors. These are the additional 3 conditions that must be satisfied by these 5 special cases companies to pay remuneration if they are incurring losses. That is section 3 of part 2 of schedule 5. Moving to section 4. Section 4 prescribes some 6 perquisites which should not be included in the remuneration. Okay, and section 5 which says that the maximum remuneration, see, let's say a particular person is receiving remuneration from 2 companies. In that case, the maximum remuneration that this person can receive from these 2 companies cannot be more than the higher of maximum remuneration of these 2 companies. See, example. One second. Yeah, there is A Limited. Now the profit is A Limited is, let's say, some 100 crores, and there is B Limited. Now the profit of this B Limited is, let's say, 200 crores. Now let's say we are calculating the remuneration for executive director. That means 5%. 5% of remuneration would be 5 crore. Here would be 10 crore. That means the maximum of these 2 limits is 10 crore. Now there is particular person, Mr. X. He is director of both these companies, A Limited and B Limited. Now the maximum remuneration that X can receive from both this A Limited and B Limited cannot be more than 10 crores. Hope that is clear. Next. Yeah, those were the 5 sections that were covered under part 3 of part 2 of schedule 5. Moving to part 3 of schedule 5. Part 3 deals with provisions which are applicable to part 1 and part 2. What it says: for giving the remuneration as per part 1 and part 2, you have to take approval, that is through either special resolution or ordinary resolution as required, okay, as discussed by us. Next, auditor or company secretary certificate on compliance of schedule 5, okay, such a certificate has to be obtained from auditor or company secretary. And part 4 deals with exemption by central government. That means if central government wants, it can exempt any type of company it wants from applicability of this schedule 5. This is the concept of schedule 5. Next, did we miss anything? Yeah, nothing. Fine. Next section. Section number 200. Factors to be considered for remuneration in case of losses or inadequate profits. See, if you are giving remuneration to the directors, in case you are having losses, then before giving the remuneration, you please consider these 5 factors. What are the 5 factors? First one, company's financial position. You consider the company's financial position. Okay, taking into account the financial position of company, you please give the remuneration as per the financial position of the company in case of losses. Next, you should also consider the remuneration or commission in other capacity. Okay, whether such person is receiving remuneration or commission from your company in any other capacity other than director, you please also consider that while giving the remuneration. Next, remuneration or commission from other company, whether such person is receiving any remuneration or commission from any other company other than your company, you please also consider that. And what are the professional qualifications of such person to whom you are giving the remuneration and other matters. You please consider these 5 aspects while granting remuneration to a person in case your company is running in losses or not having adequate profits. Next, section number 199, recovery of managerial remuneration in certain cases. See, we have seen that managerial remuneration as per section number 197 will be paid based on the profit as per section number 198. Okay, the limits of 1%, 3%, 5%, 10% will be applied on the profits that you have arrived as per section number 198. Now, the company has prepared its financial statements and it has arrived at the profit as per section number 198, and based on that profit it has calculated the remuneration and it has given the remuneration to the directors. Now, after giving the remuneration to the directors, the company came to know that there was some fraud in the company or there was some error while preparing the financial statements, due to which the financial statements have to be restated, and due to such restatement the amount of profit will be reduced. In that case, if the amount of profit is reduced, the amount of remuneration that is calculated based on this profit will also be reduced now. But you have already paid the remuneration to the directors. In that case, you are eligible to recover such excess remuneration that you have paid to the directors. That is the concept of section number 199. Next, section number 204, secretarial audit for bigger companies. What are the companies to which the concept of the secretarial audit will be applicable? First one, all the listed companies. Okay, all the listed companies must get a secretarial audit done, and every other public company having paid up share capital of 500 crores or more, or turnover of 250 crores or more, or outstanding loans, borrowings from banks, financial institutions of more than or equal to 100 crores, even such types of companies should also get secretarial audit done by a company secretary. Now, the secretarial audit report will be given in form number MR3. Okay, and this secretarial audit report must be annexed to the board report. These are the provisions relating to section number 204, and there is one section that is related to functions of company secretary. There are some 10 functions of a company secretary that you can go through. Okay, this is the entire revision relating to appointment and remuneration of managerial personnel. Hope this is clear. In the next video we will be meeting with meetings of boards and its powers.